The economic impact from these tariffs. Bring in Steve Leisman. Steve, in terms of what you've seen economists model in, is this worse? Is this better?
I think it's worse. I don't know what the average tariff is. Maybe we could just pull up. I asked them to make a board on Canada, the EU, Mexico, and China. Those are the principal sources of our imports. So that's the stuff that matters. I think it's over 20%, if I'm not mistaken. So a good chunk of all of our imports will have a tariff over 20%, I believe. And by the way, yeah, you see that big one on China, which I think is actually 54 because it's 34, I believe, plus 20. In any event, people modeled in 20%, and they were detracting from GDP. They were adding to the CPI. This just seems like the president having his own sort of school of economics that's different from everybody else. And he said that the economists were all wrong, but in fact, they would insist they were absolutely right. Here's a comment from the CATO Institute, which, as you know, is very conservative. They said, quote, "These so-called reciprocal tariffs don't mirror foreign trade barriers and ignore those imposed by the United States. For all of President Trump's talk of a new golden age, this huge tax increase will inevitably result in higher prices for American families, lower growth and business investment, and diminished exports and manufacturing output." So it is not a good forecast or a good look from the economists and the forecasters. And as you can see from Wall Street on these tariffs here, the president believes this will lead to a golden age of growth and increase in manufacturing. Economists believe it will lead to lower growth and higher inflation, and really puts the Fed in a pickle here. You can see that there was something of a bump, however, in the probabilities of Fed rate cuts, and I think that comes from a view of greater economic weakness, and they believe that it will be so great, I think, that the Fed will be forced to ignore the surge in inflation. There are the probabilities a touch higher than they have been. That December number for the third cut had been as low as 60, even 50%. But now that he's very serious about these tariffs, you have the market saying, hey, the Fed's going to cut 3 times because I believe not that the inflation is going to be low, but that the economy is going to be that bad.
Steve, it's Karen. Thanks for being on. So getting to that Fed point a little bit more, if you're the Fed, do you need to see the inflation first before you see how the weakness in the economy before you're going to cut? Because I think of Jay Powell thinking of inflation as the single most important thing he wants to not have as his legacy.
Well, I think there's some division on the Fed right now, but nobody's taking any action on the Fed. Everybody is in a wait-and-see mode. And if you take the forecast on Wall Street at where they are right now at face value, they see that core PCE number up near 3% for most of the first 3 quarters of this year. I personally have a problem with the futures market's probabilities being so high, given that the forecast for inflation remains elevated. So I think the Fed's ability to come to the rescue might be overstated here. It's a bit like there's quite a storm, and they can't necessarily launch those Coast Guard boats, even though, of course, the Coast Guard does come to your rescue in terrible weather. But in any event, it's going to be tough for the Fed to ride to the rescue with these kinds of inflation numbers that are expected. Maybe they end up being wrong. But, and the other problem you have here is you have retaliatory tariffs that could be coming down the pike. And as for certainty, I listened to the president. It sounded like there were 3 reasons for the tariffs: bring manufacturing back to the U.S., get foreign countries to lower their tariff barriers, and raise revenue. In different forms, those kind of work against each other. Maybe you're hoping they're negotiated away, but then what happens to the goal of revenue, and what happens to the goal of bringing back manufacturing to the U.S.? They sort of work in, there's a tension between those 3 goals that make it difficult to figure out exactly what the president wants here and whether some of this can go away.